Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, as per the title of this video, I'm going to be showing you how the Bitcoin has just printed a never wrong legendary signal. And this is the only fourth time in history. And the previous three times it has meant that we were well on the way to the end of the bull market. The question is, will it play out this time? Why not? Secondly, I'm going to give you something that is going to blow your mind in terms of how everything that I've covered in the last few months regarding the first peak is confirmed by this another legendary signal, which I'm going to show you. And as usual, I'll cover the general market, exactly where we are, what's happening at the current price action and where it's leading to. And as always, the 60-day cycle to give us exactly where we are, where we're heading in the next few weeks and months. So if that sounds interesting, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment or swing trade decisions. So with that out of the way, I'm going to be going through the 3 monthly chart here. And the question I'm posing here is, what is this legendary signal that we're getting? Well, it is on this 3-month chart, as you know, the higher the time frame, the more accurate the picture is with the Bitcoin price. And I'm using this 8 exponential moving average, the blue line, weaving through the price action here. And if we go back in history, back to April 2012, this was the first time we went above this blue line, the 8 exponential moving average on the 3-month chart. And this is what happened afterwards. 18 months later, it took us to the top of the bull market in that cycle there. And if we move on to the next cycle, this is where we topped out over here, came into the bear market, fell below the 8 moving average, and at this point we got back up above the 8 EMA in October 2015. And look what happened afterwards. That was the signal to take us all the way to the top of the cycle there at the end of the bull market. And if we move on to the next cycle, this is back in 2017, we topped off here, came back into the bear market, fell below the 8 EMA. Then once again, in April 2019, we got back up again above the 8 EMA. And where did that lead to? That led us to the top of the bull market in the last cycle in April and in November 2021. And look what's just happened now. Last Friday, the end of the month, that was a 3-month candle. For the 4th time in 13 years, we've just gone back above the 8 EMA here. And we're holding that as support currently. So based on the historical context of exactly what's happened here with this 3-month candle closing above the 8 EMA, we can now expect, with a high degree of probability, to get to the end over here without going back below this 15,400. That's what it really signals, that we've finally got out of the bear market. And we've been talking about that for many, many months here anyway. But this is another final nail in the coffin of the bears. It looks with a very high degree of probability it's not going to do that. And if this signal was to follow the history, then this is what's going to happen to the end of the bull market by the end of 2025 or around about that time. Okay, I'm going to move on to the second legendary signal, which is telling us something that we actually covered in the last week's video. And that is that I looked at the pi cycle and I showed you that before each of the halvings, we tend to make one peak after the bear market. So as I showed you here, that once we'd got out of the bear market here and gone above the green line, and then we hit the red line here before the halving. And in the second cycle, exactly the same over here, bull market top, bear market, got above the green line, hit the red line over here before the halving. And obviously we hit the second peak just before it as well. So we had 2 peaks at that time. And in the third cycle, which was the last cycle in 2017, we got to the top over here, bear market, bottom of the bear market. Once we got above the green line, once again, we hit the red line as our first peak before the halving. And that led us to the current cycle here, that the red line is hovering around about the 44, 45, 46,000 mark over here. And our two targets that I've been giving you for 6-7 months now are the two targets over here on the chart, which is at 40,000 and 50,000. And this target given by the pi cycle is right in between that. So this was our reasoning that before the next halving here in April 2024, we should be coming up to meet this or this target. So anywhere around this level is where we're aiming for. And having hit the red line in the previous 3 cycles, this gives us a high degree of probability that we're going to hit at least around 45,000 here. And in the previous cycle, we did go above it. So it could well be between 45 and 50,000. Okay, so what I'm going to show you now is, having shown you the pi cycle last week, I'm going to show you another legendary signal, which is really the RSI smoothed over multiple time frames. And it's only available on the normal charts and not on the BLX chart. So it only goes back to 2015 and onwards here. So as you can see, I've left the red line on and taken the green line out so that it doesn't make it confusing. So when I put this RSI on, you'll see what I mean. And it's this one here, RSI entries MTF. And as you can see, as the red line, as I showed you on the BLX chart, came all the way up here, but so did the RSI. So you got a confluence of the RSI coming down and the pi cycle here meeting together. And that was enough resistance for the price to come back down and have a correction. So this was the first peak after the bottoming of this market here. So what happened in the second cycle? So this was the actual halving in May 2020. But before that, as per before, we'd bottomed out here and we came up all the way to the pi cycle. And look where the RSI is. It came right up with the confluence of the red line here. So at that point, this is where we got the rejection all the way down here. So that was 2 out of 2. And the million-dollar question is, where are we now with it? And here we are. Once again, the red line, as we've seen before, 45, 46,000 here. And the RSI being exactly at the same point as well here. So once again, we've got added information that's telling us with a high degree of probability, we're going to be coming and meeting this line anywhere around about the $45,000 to $50,000 mark here. And the question is, will it play out? Obviously, only time will tell. All we can do is go by the charts, what they're telling us. And these are incredible signals, which gives us a great guidance as to what may happen from where we are here to the first peak anywhere around this region. I hope you found value in that. If you did, then please do smash the like button. And if you haven't subscribed, I don't know what you're waiting for. So here's the general picture with Bitcoin. What we've done is basically moved up into resistance one more time, currently here at the $31,000 mark. This was our resistance previously, and what we've done is we've had a correction back to the baseline of 25,200, which was the inverse head and shoulders neckline over here. And what we've done is we've bounced back up into resistance one more time, and we're waiting to either break up or to have another correction over here. And if you use the bars pattern to predict the move up here, you could actually use this bars pattern from the bottom here to where we got to at the top here, 31,000. And if we line that up with this price action, we can see that this would be predicting this price here at around about the $50,000 mark. And you can also predict it by using this kind of method here. If you take the move from the bottom at 15.4 to the first top that we got here at 25, and then we move that up from the correction here, takes us straight to the 31 over here. So the next move, according to that, would be from this correction, and that would take us to the first target over here at around about 40,000. So we know there is a very high degree of probability that most roads are leading to this level here between 40 to 50,000. I've drawn this as a green line previously, but it's the same thing. It's a trend line at the end of the day. And so it would have a relevance and an importance over here when we come to the price action hitting that line here. And in terms of the moving averages, just need to keep an eye on this red line here, which is the 100 simple moving average on the weekly chart. And the reason for that is that when we look at the actual level here of the red line, it seems to be taking into account the bottoms of these wicks here. And there seems to be a lot of support at these levels, support and resistance all the way along here. and here. So this red line, this 100 simple moving average weekly line, and that's exactly at 32,400. So we may just have a quick move up to the 32, 33, even 34 up here, might just push up to this level before we have another rest, another tea break before we move on to the next level. So depending on how rapidly we move up, it may well be that we don't get up to our target of 40 to 50,000 in this cycle, but we may do that in the following cycle. So all depends on the price action, that is key. But what we can see here is that the 20 has gone past the 50 simple moving average and now crossed over the 200 as well. So having lost the support over here of the 200 on the green line, we've managed to recapture it with a very strong green candle over here. And on the monthly chart, since we've just closed on Friday at the end of June, for the first time since 2015, we've had a bullish engulfing candle over here. So once again, everything seems to be pointing in the upward direction over here. And obviously we're going to get corrections and stopovers along the way, but the general trend is to the upside. Okay, moving on to the 60-day cycle, our favorite part of the program. We are currently from the bottom here at the end of 52 days, we're currently on day 18 of this 60-day cycle. We're going into this midpoint over here, and we're hoping we're going to be making a right translated cycle. And that means that we're going to be getting into this here and past the midpoint somewhere here, hopefully, which is going to create higher highs along the way and past the midpoint as well, which creates the right translated cycle before we have a move back down into the 60-day cycle low at the red line here. So the midpoint is around about the middle of July. We're obviously hoping it'll go to the end of July. So we've still got around about a month for this price to play out to the upside, and depending on how rapidly the price moves, if it's only going to move sideways slowly, it looks like that in this cycle we're not going to achieve our first peak of around about the $50,000 mark here, but will be dictated to by the price action as we go along. And as you can see, last few days we've printed this long-legged doji candle over here, and usually that's a sign that we're going to be basically framing the price action at the top and at the bottom for a few days. So you may well see a movement of this happening in the next few days to the top and bottom of this long-legged doji candle. So in order to frighten people, to shake them out, it may well go back to the bottom of that at around about 29.5 one more time, shake them out, frighten them, and then move back to the upside and hopefully break above the top of that doji candle. And that doji candle was obviously created by the news of the ETF being rejected last week. But when you look closely at that rejection, it was basically saying that the application was not being rejected, but it was actually, on close examination, it was telling the application that it was inadequate until further information is provided. So we had a big fall and a big recovery on Friday, and that created this long-legged doji candle over here. So just to share my strategy, as I've done all the way from down here, when it was at 15,400, I was accumulating at the 17.5 and then at the 15.4. And as I've been saying consistently since then, that I'm just riding it as much as I can up to here until we get to the first peak, which is, as we know, is between 40 and 50,000, but with a higher degree of probability, it's going to be between 45 and 50,000. So the simple strategy is to just keep riding this along the way. And as you know, I've got 90% in my long-term portfolio, which I've carried all the way from down here in the Bitcoin miners, not in the Bitcoin, but the Bitcoin miners. And I play with the 10% in the swing trades in the Bitcoin Miners Club that we have running every Wednesday. And currently with the Bitcoin Miners Club, this is the second round of the swing trades. Since we started the Private Members Club a few months ago, we've already had one round of swing trades back in March, April this year, and the average increase that we got was around 40% in about 6 trades that we did at that time. So that was the average that we created with the swing trades with the Bitcoin miners in the previous cycle. Obviously the last cycle was a failed cycle, so we had to really forego that with the swing trades. But the current cycle, as you can see, we're right at the beginning of it, and we're waiting for movement to the top side here. So we're currently in 4 trades, and the first one is so far up by 18%. The second one is actually down 3%. The third one is up 2.2%, and the fourth one is actually up by 1%. So far we've got an 18%, a -3%, +2% and a +1%. And as I say, we're only at the beginning of the swing trades. We've only taken them last week. So obviously there's a long way to go yet for the next 4 weeks. So there's plenty of growth in the Bitcoin miners. And what we have with the private members club is that I give you the exact entries, the exact exits, and also the exact stop losses. And apart from the swing trades, we also cover the usual technical analysis on the 60-day cycles, undervalued Bitcoin miners for the longer term as well as the shorter term. And if that's the kind of thing you're interested in, then you can join us by clicking the join button below any of my videos. And that's this button here, or in the description box, what you've got is another link button here for those with a handheld device. And when you click this button, you'll get this box here, and for $4.99, you'll be able to have access to all the previous swing trades, as well as all the videos and all the library of all the information that we've posted ever since we started the Bitcoin Miners Club. And if you're curious and you just want to try it, as I say, it's only $4.99 and there's no obligation. And if it's not really for you, then you can cancel at any time, hassle-free, and you still get, in between for 1 month, all access to all the previous private members videos and all the previous and current swing trades. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.